Good afternoon, everyone. You're all very welcome to our Thursday market open for the US trading session in the backdrop of what has been a very couple of volatile trading days. It all really has started on Tuesday as we recap on the CPI from Tuesday. Obviously, the follow through yesterday from the Fed, the meeting where they increased their interest rates again by another 50 basis points. And that has been followed up by today with the Swiss National Bank, the Bank of England, and the ECB have all joined the Fed by raising rates by 50 basis points. So overall, the approach of the central banks globally to tackle the higher interest rates is remaining steadfast in their approach to get these interest rates as high as possible to start having a meaningful effect on these out of control inflation levels that we've seen through the course of 2022. So there's quite a bit to kind of digest and go through today. So I suppose really the best place where to start is if we look at the movement in the indices. So without further ado, if we look at the price action on the S&P from Tuesday, we can see that very quick movement. As we said, it really kind of started on Tuesday with that higher than expected move in the indices, that initial pump on the CPI figure. However, those moves by Tuesday evening had very quickly eroded. And that then brought the markets into yesterday, where we did see a little bit of pre-buying into the FOMC, kind of 2, 3, 4 o'clock, but by 6 o'clock into 7, when that news broke, of course, the indices sold off again. So it's important to be aware of the fundamental dynamics at play in these markets. Now, broadly speaking, yesterday, 7 to 8, we had that initial pump, lower. We then had that cyclical correction back up into those liquidity areas, which we can actually see here. S&P got back to that 1 hour liquidity area, which proved to be the highs really into the close as the markets evaporated and turned lower. Then, as we fast forward into the Asian session overnight, the Asian session continued to provide a shift, or that continuation shift in bearish sentiment, and we sold off right through into the London Open. Now, of course, in the last couple of hours, as we said, the Bank of England and the Bank of England and the ECB both increased interest rates by 50 basis points accordingly. So, of course, we have to factor that into the price action. And of course, we can see that very clear selling has continued off here in the US-based indices. But of course, if we look at the European indices like the DAX, you can see very clearly the same effect, the same conclusion has happened. The DAX, as I said, Tuesday, initial pump off the back of the US CPI, mostly sideways yesterday until, of course, we got that movement on the Fed last night, and then through the Asian session, right through the London Open, and of course into the Bank of England and the ECB, European indices have been on the back foot. DAX has gotten absolutely walloped. We were trading yesterday up around 14,400, 14,450 into the FOMC. We're now trading a modest 370 points lower within approximately 2 trading sessions, or less than 2 trading sessions, as we now head towards the US Open today. So naturally enough, indices are very much on the back foot, and the bears, as we said in the prelude, is back in town. So with that, we obviously have to factor in the price action, of course, the cross asset basis. So we're seeing the FTSE sell off. We're seeing the Dow Jones sell off consistently from last night. We're seeing the NASDAQ, the tech orientation NASDAQ stocks, that is taking quite a hammering as well. We saw it last night initially, that initial sell off in the NASDAQ got back to liquidity level as well, around 900 last night. But since then is trading another 350 points lower into the US session open today. So risk orientation is heightened. Very much so. We're seeing indices get hammered. We're seeing, obviously, across the board, European indices getting hammered. We talked about it last night, the gold prices. How would they fire out? How would the price action in gold? And of course, yesterday, gold prices into today's session has actually sold off again. Now, we are finding a short-term bottom in gold, but again, that's after a modest kind of $35 to $40 sell-off from last night's FOMC into the Bank of England and into the ECB meetings today. Of course, Lagarde is on the wires at the moment. And of course, we are looking for more guidance regarding that. So current interest rate stands, obviously the Fed raising rates yesterday, as we spoke about, ECB raising rates today. So ECB now currently sits at 2.5% for the main financing operations rate. So that's obviously increasing. And of course, the Bank of England have also increased rates as well, as we talked about. So where does that leave overall interest rates? Well, if we look at the economic calendar very quickly, just to kind of bring this up as well, yesterday, the Fed, as we said, let me just bring in this week, Wednesday, the Fed obviously seeing rates jump higher, as we kind of talked about, 4.5% in the Federal Open Market Committee's interest rate. So US leading the curve, leading the way, and everyone else is playing catch up. Today, as I said, Swiss National Bank raising rates. They are now at 1% from negative percentage points pre-2020. They're now starting to raise rates as well. The UK moving their rates to 3.5% with a 7-9 vote in favor of increasing the rates. Now, of course, 6 of the 9 voted for 50 basis points. Man voted for 75 basis points, and the other two, Tenrero and Dingra, voted for no change. So there's overwhelming majority, except for the two, I suppose, outcasts. They're all voting for increases and consistent increases as the inflation narrative continues to wage on. Now, of course, if you're looking at the current inflation figures in the UK, you only have to go back to yesterday morning's data, which shows that the consumer price index in the UK is still at 10.7%, with the core CPI, should I say, at 6.3%. So naturally enough, the old historic rhetoric in economics suggests that in order to bring the inflation levels back down, one must get the interest rates above those levels. Now, as we stand, even in the UK, we are today 3.5%. So we're still some way behind the CPI levels, yet some of the central bankers in the Bank of England are looking to keep the rates pretty flat. So you'd wonder kind of what their thought process is in regards to that. And then, of course, that moved us towards 1 o'clock. So, of course, 1:15, we had the ECB raising rates from 2% to 2.5%. Now, of course, they do have 2 interest rates. The deposit facility rate is 50 basis points behind the main refinancing operations rate. And if you're looking for more information on that, feel free to Google it. There'll be a lot of information online regarding that. Then, of course, today at 1:30, in the midst of all of that, before we got the ECB press conference at 1:45, we've also had retail sales in the US, which has been negative. We've also had weaker Philly Fed manufacturing survey, which is weaker, and the New York Empire State Manufacturing Index also weaker. So that is showing that not just the interest rates are going higher, CPI is coming down broadly, maybe not as one would have expected, particularly in Europe. US maybe a little bit better than expected, but all of the other data points are starting to really turn negative. Even the retail sales now are starting to turn negative. So that's putting a lot of pressure on the indices. And of course, with the negative association and annotations associated with the data, of course, naturally enough, the indices is going to be on the back foot. And of course, when we look at the price action since Tuesday into yesterday, and of course, in today, the indices have been trading a fair bit lower. Now, of course, you also have to factor in how much the indices have recovered in the last 2 months or so, because remember, this was the October CPI down here. We've rallied all the way higher, with the December CPI likelihood being the high for December and for the last month of the year. So it'll be interesting to see how does that dynamic play out over the coming session and, of course, into tomorrow. Now, this is really kind of the last major trading week of the year. Next week, there's not really that much in terms of fundamental information out, as I said, because of all of the central banks reporting this week. So that's kind of where we are in the indices. Into the open, of course, if we look at the DXY, however, is still broadly on the back foot, and I suppose really that's because the euro has been a big winner today, and it has picked up a lot of strength. So broadly speaking, that there is a negative relationship between the DXY, the dollar performance, and the euro, broadly speaking. So of course, when the dollar is weaker, the euro trends higher, and vice versa. When the euro moves weaker, the dollar trends higher. So it's no real surprise that even though indices and risk assets are selling off, the only reason why that's not propping up the dollar and the dollar strength is because the euro has seen fairly aggressive moves today. And of course, if you look at the euro pairs, euro Aussie, euro Swiss, euro dollar, a lot of those pairs, you will see upside progression because of the much stronger euro today. So it's important to factor that into consideration. In other markets, really, kind of before we look at the open and before we look at market profiles, oil is still on the back burner. So oil has got back to the $70 level on West Texas oil, the US oil, but is working itself way back up. So it'll be interesting to see over the next few days into Christmas, do the oil data get back to 80? And I suppose that's going to be the big talking point into year end. How will the oil markets fare given indice weakness, given the slight bat of gold weakness this morning, and of course even the dollar weakness as well. So you're seeing all of these different dynamics play out simultaneously, and that's really, really important. So that really then brings us to the market profiles. So where are we today when it comes to the market profiles? Well, we've seen that massive bleed yesterday. Of course, we had the initial impulse, then we flagged back up into the POC range. So yesterday's POC was at 4039. And of course, last night, if we look at the S&P on the 1 hour chart or even the 30-minute charts, you will see that after we got the Fed spike, the markets moved all the way back up to 40.41. And of course, that was in fact yesterday's point of control. So the point of control yesterday was really kind of around this 35-40 level. And when we got that initial spike, the markets rallied all the way back to the point of control, where we got the rejection, we got the leveling out of the portfolio. We came back to 4,000, which was a big level we talked about last night for the week with the options expiries. And of course, we started to slide. And once we started to slide through 4,000 consistently, then it was a case of, well, looking at today's order flow. And today's order flow has consistently churned lower through 4,000, consistently down to 39.40. So now, as we look at the point of control today, on the S&P, the point of control is set at 4,003. So it'll be interesting to see if there is any sort of short-term recovery in the S&P, given the very, very clear sell-off we had initially last night, and that secondary impulse of selling today, really from that London Open, from 7 o'clock this morning, even before the London Open, at the end of the Asia session, we started to see that selling coming through. So that's really worth keeping an eye on today to see how did the markets react today. Do we get back to those point of control levels? Or kind of what is the kind of the rationale for the rest of the day. So I'll be watching closely as the markets open today. We're seeing a little bit of a bump here from 39.50, but it's in course to be consistent with what's actually happened. It's from Tuesday, that impulse up and down move off the CPI, and of course that selling initially last night from the Fed, and of course today from the Bank of England and the ECB. So it's worth looking at all of these different aspects collectively to forge a very, very clear directional bias in the markets. As we then move to the Dow Jones, as I said, USA 30, Dow Jones Industrial Average, Wall Street, again, very, very similar narrative, very, very clear sell-off last night. You'll see it initially, then we flagged all the way back up into 200 level. So if I bring up the chart as well, you can see that very, very clearly, 30-minute chart. We had that very, very clear sell-off all the way back up into 200, 220. And of course, if you use your market profiles, you will see yesterday, the market profiles was set slightly underneath the 200 level to about 180. 175, and we got all the way back up into this region before obviously the market sold off. And of course then we had that grind lower into the Asian session, of course, where we're trading today. So value highs today is at 34,000, the point of control is at 33,750, and we have slid all the way lower to 5 underneath the 600 mark on Wall Street Dow Jones. So 600 is kind of where we're currently trading at. So it'll be very, very interesting, even from a POC level perspective. Do we get back into this 700 perspectives? So we're about 150, 200 points below the point of control. So that really becomes the narrative today, that if you're on the sidelines, given that we saw it kind of play out so well this week, particularly last night with the Fed and this morning so far, will we get kind of one last move into the point of control to really take out the volume and then start simulating clearer bearish directional bias? So that is probably something to look at for those who are maybe on the sidelines looking at opportunities on where to get into the market. So keep an eye on those market profile levels, the POC specifically. And that then really finishes it off with the NASDAQ, right? The NASDAQ for today has been very, very clearly bearish as well. And of course, we know the annotations, as I said, with the NASDAQ, it tends to get hit heavier. When things do well, it tends to outperform because of its relation to the riskier tech-related stocks. But when it starts to outperform, we start to see the slide and the bearish sentiment coming in, the NASDAQ usually gets hit a lot harder. So of course, Tuesday is your prime example on the upside. The NASDAQ was trading at 3.5% positive for the day. The S&P in comparison was only at about 2.5%. Whereas today, we're obviously seeing the NASDAQ get hit a lot more extremely than that of the S&Ps, and is obviously continuing to move lower. So this 11,500 level, we talked about it last week, and we've talked about it in our Tuesday Zooms. We've talked about it in the discussion group as well. This is going to be an interesting area to see how does the markets react, given that we obviously did try and break through highs on Tuesday. Initially, we got there. However, it didn't sustain, and now the markets is rolling over again back into these local lows. So 11,500 really becomes the focal point of how does the markets react into today's session, US session, as the session develops broadly. And of course, we do have more data today in the US in the next half an hour or so. So of course, today, Thursday, we do have business inventories, we do have gas storage, we do have options expires as well tomorrow. So it's, of course, it's important to factor all of these into consideration as well. And of course, NASDAQ, we had that move yesterday, very, very clear assimilation from under 12,000 all the way down to 600, all the way back up. And then, of course, we got that deeper grind through the 700s, really where we're closing at 11.6 this morning. Now, of course, NASDAQ has been fairly clean selling this morning. We've been Asia session, very, very clear move. And the point of control is actually down here near the value lows. Now, although we do have an equaling level, because you do have 10 prints here, we do have another 10 print here, but up at 740. I suppose you're looking at the different stages, because you have an area of volume here, as I said, around 700, 750, but there also is an area here around with the liquidity around 600. So I suppose if we take out the 600s, we should probably look to see all of this gap in volume being taken out as the price action returns to 750. So just be kind of wary of the two different segments or areas of price action on the NASDAQ as we break through this. But structurally speaking, from a short-term perspective, NASDAQ is still very much hovering lower as I said, into the main parts of today's session open. So we're about 5 minutes open here on the clock. Initial impulses, NASDAQ is still trending lower. S&P's still grinding lower as well. Even on the shorter time frame perspectives, you can see the S&P dialing lower on the open. And of course, indices, Dow Jones is following suit. So indices still continue to remain very, very bearish, or very, very much bearish as we approach December lows. So December lows really here on Wall Street is 33,400. The NASDAQ around 11,500. And the S&P, as I said here, is really coming in around this 3,900 level. So it'll be interesting to see how does that continue to play out, as I said, into today's, the better half of today's session. And of course, seeing does those selling biases, those impulses continue to play out in these markets as well. All right. So that's effectively where we are for the minute, everyone. So I suppose all eyes really on the price action through the course of the session. We have sold off quite heavily over the last few days or so, particularly from Tuesday's highs at 4,100, 12,200 on the NASDAQ. Way up here, of course, 12,100, and of course on the Dow Jones, where we did reject this 34,875 level, just underneath 34,900, and has been moving moderately lower since then. So the highs of the week looks fairly set at this moment in time, but it's just literally a case of do those December lows give way as well, and that's probably the biggest consideration into tonight's close in the US. All right, so that's pretty much where we are, folks, for today. A big week gone by, of course, looking at the price action into tonight's close, and then having tomorrow with one final day this week. So of course, tomorrow, as we said, options expiries. We do have quite a bit of data out tomorrow as well. We've got harmonized prices, consumer prices in Europe. We've got Canadian info. We've got PMIs across the board. We've net positions coming out as well. And we do have PMIs as well in the UK. So there's a lot of PMIs tomorrow. We've retail sales out. So another busy day tomorrow from a data perspective. So it'll be interesting to see, does the likes of the PMIs, do the retail sales, do all of these figures give out negative results or negative information? And of course, that's only going to compound indice performance, as I said, into the weekly close as well. All right. Have a great day, everyone. Trade safe. I'm going to